So we're just touching on the futures, hitting the high point of the morning so far, up pretty big right now. What do you make of that after we come off a winning week on Wall Street, but obviously we have a lot of specters of volatility out there in the banking sector and other areas?
Well, the futures position can change really quickly, as we've seen over the last few weeks. The main thing is, just listening to some of the Fed presidents speak late last week, they're still not concerned with so much with the banking crisis, but are really still focused on inflation. So I think, a lot of the speak that we'll hear later in the week will continue to be focused on just that. We saw them, stick with the quarter of a point rate rise last week, and I think that that's just more to continue on the market front.
So I know you believe that some of the volatility in the banking sector is weighing on the broader market, and it's a concern. But what we're seeing today with First Citizens buying some of those SVB assets, does that make you feel more confident about the banking sector, or at least about the contagion being contained?
Look, there's clearly an effort being made. I mean, just trying to learn some of the lessons of '08. I think it's good that some participants in the banking sector are being very proactive. That's a good thing. But this is a lot wider, a lot broader of a problem than I think the market is continuing to price in. I mean, we're going to continue to see pressure on regional banks. We still have loads of companies to report earnings next quarter, and there's a lot of mark-to-market risk in their bond portfolios. So I think there's more to come. But I am encouraged by some of the solutions that have been provided early on in this.
Yeah, we are seeing some encouraging signs in the pre-market, not only futures, but the KRE, the regional bank ETF, up as well.
Yeah.
Okay, so we know there's some problems out there. Everybody knows that, even risk of recession. We're hearing Neil Kashkari and other people spell that out. Where are you seeing opportunities in this market? What sectors are you looking at, or any particular stocks that you're looking at?
Yeah, so what I typically look at, if you look back in history at these periods where you had sort of the last Fed rate hike. So if we just saw the last Fed rate hike, and I'm not saying that we have, but between the last Fed rate hike and the first rate cut, typically the sectors that outperform are areas like consumer staples, sometimes materials, and utilities. But when I look right now at the market, I look at companies that maybe have been a little bit oversold. I really like infrastructure. I like the rails, particularly in Canada. I like Canadian Pacific. That's a company that just completed their merger with Kansas City Southern. If we think about a world that's going to continue to deglobalize, and there is some indigestion that goes on with that as well, among different sovereign nations.
Okay.
But I'm very encouraged by a company like Canadian Pacific and the cash flow and the balance sheet that they present to
really
investors.
quick, you're saying Canadian Pacific's a reshoring play, because obviously some of the assets they bought from KSU, which is Kansas City Southern, also bringing them down into Mexico, where we're expecting to see a lot more production happening there.
That's correct. And so I completely see that as a reshoring play. And, having now rail lines going from Canada all the way down to Mexico, they really have a hold on the North American, rail system.